In this session, let's take a good look and review for arguments about artificial intelligence bubble. What arguments are for and what kind of arguments are against it. First of all, the definition itself. AI bubble refers to a widely discussed, hypothesized, active stock market phenomenon where investments in artificial intelligence have rapidly driven up the valuations of tech companies, especially giant ones, raising concerns about a potential market correction like the dot-com bubble of the late 1990s. Approximately by year 2025-2026, experts already were actively debating whether this potential bubble had already begun to burst, with notable volatility in computer-related stocks and warnings from industry leaders. In previous session, I mentioned about stockbrokers and stockholders speculating on future prices, so-called future X. Let's take a look at key aspects of the AI bubble theory. Circular financing. Concerns exist that leading AI firms are involved in a circular flow of investment, where tech giants, for example, like Microsoft, Nvidia, Amazon, Alphabet, invest in startups which then spend that money back on the giant cloud computing and hardware services. Over-evaluation and hype. Valuations for AI-related stocks have hit extremes, with forward earnings projections appearing far in the future compared to current actual earnings. Hardware overbuilding. Massive capital expenditures by tech hyperscalers expect to reach nearly 3 trillion by year 2028 suggests a potential oversupply of infrastructure, mirroring the telecom overcapacity of the dot-com era. Resource constraints. The massive energy needs for data centers are a significant bottleneck itself, with electricity availability threatening to slow AI expansion approximately by 2028, 2029, simply speaking, by 2030s. Next, there are two major arguments for and against the potential bubble. Some people say it's a bubble. Analysts point to insane spending, the concentration of gains in a few companies, and speculative vendor financing as signs that the bubble is maturing towards a bust. Some believe that bubble is already bursting as marginal players experience significant setbacks. I mentioned in previous sessions about investment versus actual revenue. Others say that it's fundamental transformation. Others, including major investors, believe that while pros exist, AI represents a foundational technological shift that is generating real revenue, different from the dot-com era, lack of tangible business models. Predictions for the future, once again, there are two of them major. Potential collapse. If the AI bubble bursts, it could lead to significant reductions in capital investment, dragging down gross domestic product and potentially causing a recession worldwide. Long-term impact, positive one. Even if the bubble pops, proponents believe that AI technology will continue to mature similar to how the internet survived in the 2000 crash. Through many startups and investors may face significant losses. And let's state current status. Observers reported that the AI bubble was accelerating in its money burn phase, with increased pressure on AI companies facing high debt, unsustainable business models. Others describe the market as entering a period of differentiation, where the strongest AI players survive while others struggle. Simply speaking, overall, to sum up, AI, artificial intelligence, progress belongs to giant tech companies.